Okay, good afternoon, everyone. Welcome to the weekly Levinson and Associates training webinar series. Here we are this beautiful Thursday afternoon, and I hope it's beautiful wherever you're calling in from across the country. Most important, we appreciate you taking the time, and we want every one of you to walk away with a nugget or two that you can use in your daily sales practice to make more sales, supplement your income, right? And hopefully make this your best year ever, okay? And it's our job to go out there constantly 24/7 and find the hottest products, carriers, technology, sales programs, lead programs, all of the above to make sure that our agents have everything they need to have the best year to date. Okay, that's the point, and we take it very, very serious. In fact, we meet on a weekly basis and we go over maybe what carriers are doing, other IMOs, even other industries, what they're doing, what technology are they utilizing, right, to make the phone ring and ultimately spark people's interest to pick up the phone or reply to an email or answer to a Facebook ad, whatever the case is. So anyway, I want you all to know, and I think it's very, very important that we don't take this lightly, and we're not just another IMO that says, hey, you know what, we're going to provide the best carriers and products and contracts, and we're going to say we have great customer service, and we're going to take that model to market, because that doesn't work anymore. That's 1987 in a nutshell, okay? Yes, you need all of those things, but today, to be successful, and this goes for a carrier, for an IMO, for an agency, for an agent, it goes all the way down the chain, okay? You need the ultimate value add, the ultimate differentiators. Why you, right? At the end of the day, what makes you different, unique, right? With the internet and social media, let's face it, we all have a ton of competition. And if you don't have a different special story, message, value add, no one's going to hit reply on your email, or no one's going to answer your voicemail. Whatever the case is, it's not going to happen, right? If you're just another Me Too. So that's what our story is about here at Levinson. That's what our platform is about. We have an infographic, full menu that goes over 57 different options and sales strategies and lead programs and ways to generate your own leads. 57, like a menu at the local IHOP restaurant. Okay, well, what is it? 57 variations of pancakes. Okay, that's how we look at the life insurance and annuity space. But these are options for you all to leverage, right, to get your name out there and market like the pros. Okay, the podcast is a great tool for you. Okay, the monthly podcast episodes, I handpick some of the top agents and agencies in the country and pick their brain, just like as if I was you sitting in Lincoln, Nebraska, and it's 10 below zero, right? And I'm trying to learn how to be more successful in 2022. What can I do different this year? So check those out. They're all free, and I made them for you. Okay, I put my agent hat on and literally pretended I was an agent in the field. So please check those out. Go on our Facebook page, like our Facebook page, leave a comment about any of the podcasts or any of the webinars, and I'll send you the new IUL prospecting book for free. So everybody's a winner. Okay, speaking about winners, now this is pretty cool. So today, in fact, we have a huge number of attendees on. So again, my hat goes off to you. But what we're going to do is one of you will win the new Apple Watch. Okay, I have it sitting here, just got it in, wrapped in cellophane. I'm going to pick one name at the end of this presentation in about 52 minutes. Okay, whoever answers our question first, the answer is in the slides. So whoever answers first, I'll announce your name at the end, and you get the new IUL prospecting book and a Apple Iwatch on us, okay? And now, you do have to be active with us, okay? Active means appointed with at least one company. That's the only caveat. So make sure it's you and make sure you're on till the end. Okay, what we're talking about today, some pretty neat stuff. So when it comes to long-term care, living benefits, right? We all know standalone LTC policies are pretty much a thing of the past, right? And the few products that were still kind of stringing along, the premiums went through the roof. People are dropping policies. I heard about lawsuits. Most carriers pulled out. Okay, and what happened a few years back is a handful of companies went into the hybrid space. Okay, and I'm not going to sit here and name each product and carrier, but that was kind of a hot button years ago. And there was one company that kind of stood out from the rest, okay, when it comes to annuities and life insurance, right, with a built-in lifetime LTC benefit, okay, no exam with any application, okay, as long as it's a healthier, younger client. You don't have to worry about exams, and literally the underwriting is as fast as the quickest life insurance policy today. Okay, so there was one company, A+ rated, that kind of stood apart from the rest, and here we are in 2022, and our numbers are literally doubling with them every single year, and there's a reason why, and that's why I invited Mr. Keith Burke on today to speak to everyone about One America, the latest product updates, the latest strategies, what's hot, what's not, and what our agents are selling more and more of, because I want you all to know what's working and know enough to be dangerous, okay? Even if you're focused on final expense and the least expensive term insurance that's out there and you like to be in and out, it's okay, because when we finish today's training, you will know enough to be dangerous, and as fast as you can sell a final expense or a term policy, you will be able to sell a One America product, okay? I promise you, okay? Once you have your arms around this, you'll have a great message and a great differentiator, right? Because you're not going to be like everyone else that's just pitching, the least expensive life insurance. You're going to have a new story to tell, okay? I promise you that. All right, let's move on. We got some pretty cool stuff happening here at Levinson. So just like I was saying in the beginning, we can't be like everyone else. What's unique? Why should you look at Levinson, right? Let's go on to the next slide here. And I think that you need to know we put the bulk of our overrides back into our iGenius platform for our agents. So you have access to the best technology, and it's free, okay? And here's the new revamped, refreshed Levinson mobile app 2.0. It's coming out in about 10 days. I am so excited. We've been working on this for almost a year. So write this down, 2/11/22. That's the official launch date. And this is going to be so cool because you could literally be on vacation in Hawaii on a Sunday, and you're jogging on the beach, and you run into a guy or girl, and you start making small talk about where's the best black sand beach to go to in Hawaii. And next thing you know, you're asking each other about what you do for a living, and they say, oh, I need a quote on life insurance. The timing is perfect. Oh, my gosh, let me pull out my iPhone or Android, and boom, you have everything you need at your fingertips. Single sign-on, one time. Okay, everything's reformatted, right, to fit into your screen, and you can literally run a quote, go through X-ray, use a iGo e-app, drop ticket, check case status, our sales tools, the podcast, the training videos. Okay, we even have a chat box, which I've never seen in my life. Okay, we have Expo Registration, which, by the way, I hope you registered by now. We're going to have over 300 agents in attendance for the Expo. But anyway, you can register right from the new mobile app, and just make sure we're going to send out a memo on 2/11/22, but just make sure your eyes are peeled for that. You can do away with the old version. This new one is going to blow your socks off. It's a first ever in the insurance brokerage space, and I'm so excited. And again, doesn't cost you a penny. Next slide, please. So this is a big deal. This is kind of the talk of the town starting out the new year. This was an article by the One America CEO, and I'm not going to steal any of Keith's thunder, okay, but this was just mind-boggling to me, okay? And I said, in fact, that's how this whole webinar idea came up with Keith, is I said, Keith, we got to get you on here. We got to talk about this for a second. Plus, I know you guys made a bunch of new updates, so I want you to talk about that. And also our numbers have doubled. Okay. So we obviously got to share with the rest of the agents what's working so great with our existing active agents with One America. So anyway, let's look at the right-hand side. That quote, we're seeing right now the highest death rates we have seen in history of this business, not just at One America. The data is consistent across every player in the business. What we just saw in the third quarter, we're seeing it continue into the fourth quarter. Death rates are up 40%. Think about this for a second, okay? 40% is unheard of, okay? And I know Keith is going to shed more light on this. 40% for the age range 18 to 64, okay? That's astonishing. That's nuts. So I'm going to have Keith talk more about this, but you talk about the pandemic, COVID, okay? Is it on the top of everyone's mind right now and for the last 20 months? Abso-freaking-lutely, okay? And guess what? You are Superman, Superwoman coming in with your cape on, okay? You're not sitting at the living room table anymore. You're doing it through a webinar or through a phone call, but you are here to provide product and solutions. God forbid the breadwinner gets sick, dies, okay? Think living benefits, think death, think a 100% tax-free death benefit, okay? And you can provide this. And you have all of the best products at your fingertips. So anyway, there's never been a better time for you to be an insurance agent. In fact, not just in our industry, but think about any industry right now. Unless you're selling, masks and disinfectant products, okay, there's no better industry, okay? Yes, real estate and mortgages are hot, okay, but that's short-lived. We know that. Anyway, it's a great chance to build your book and make a ton of commissions, and most important, help these families. Let's move on to the next slide. This is our Levinson Expo, and Keith will be there in attendance. Our keynote speaker is best-selling author Mary Reed. She has written now 5 books on distribution solutions, all based around retirement, tax-saving strategies. Okay, you talk about having the ultimate differentiator. She will come in. If you have a guy or girl, like everybody does, right? We all know someone. She will literally come in, set up the appointment with you and the client, do all of the heavy lifting and selling, okay? And you keep the bulk of the commissions. Average target premium is over $140,000. We just placed 6 cases with LSW, with one, actually the agent's on right now with us. But anyway, she is our keynote. It's going to be an amazing day, free for everyone. Starting at $20,000, you get a free night at our beachfront resort, and then starting at $50,000, free night plus round trip airfare. And again, bring the whole family, spend the weekend at $60,000. It's going to be awesome. And again, brand new with us, free. Okay, free breakfast, lunch, snacks throughout the day. Great day of networking, sales ideas with our top carriers and Mary Reed as our keynote. A day you won't forget, I promise you that. It's been almost 2 years now because of the pandemic, actually more than 2 years because of what's going on right now. So couldn't be any more excited. What's new at Levinson? I'm not going to take too much time because Keith is going to run for like 30, 40 minutes today, which will be a ton of value add I'm excited about. But let's just skip around here quickly, and we're going to include all of this in our thank you email today. So just keep your eyes peeled for the thank you email. We're going to have the brochures for the One America products. We're going to have licensing, onboarding, everything you need to get started. We're also going to talk about all of the other living benefit products, our cheat sheet, okay, that you need to have access to when you're calling these clients or leads, okay? Let's see, what else did I want to mention? The Expo registration will also be in that thank you email. So make sure you register tonight. You'll get it, I'd say, by 8, 9 p.m. today in your inbox. Check your junk folder as well, just in case. Let's see, the January 2022 podcast episode is going to be a very exciting one. The reason why, it's going to be me and Carrie this time. Okay. In fact, first time ever, we're going to be talking about sales in general, what it's like to be an insurance agent in 2022 with what's going on, tips, tricks, what are we seeing that's working best with our top agents and agencies, recruiting and retail sales. It's going to be awesome. We're going to launch it by the end of this month, which will be in just a few more days. Okay, let's move on to the next slide. I want to discuss real quick our featured presenter today, Mr. Keith Burke, and is also a good friend of mine. He's local here. He does all of our breakfast meetings, which we're going to have a few coming up here shortly we'll discuss. But when it comes to living benefits, there's no one better than Mr. Keith Burke. And Keith, you there, buddy?
I am, Bill. Can you hear me?
Yep, loud and clear.
Oh, okay, great. So I'm going to take control and show my screen. Great. I'm going to start off by, first of all, saying thank you. You always know how I love being able to get FaceTime with you guys and your agents and advisors. And I am consistently, I don't know, to think going back to my days at Genworth almost 18, 20 years ago, I'm consistently blown away by the value add that you guys offer to your agents as a BGA. Almost makes me want to stop being a rep and work for you guys as an agent. The innovation in tech alone always blows my mind. So kudos to you. You guys always setting the curve, never behind it. So, yeah, we're definitely going to start with, I don't want to say the elephant in the room, but certainly Scott Davison, our CEO, made some industry noise and news when he was at the Indianapolis Chamber of Commerce. And as Bill took a great quote, it's exactly what I was going to highlight here. These are my quote unquote talking points. We were not able to send anything out to our distribution after that happened, and there was an enormity of chatter that came off of that, because as Bill just said, what Scott unveiled based on our numbers was a 40% increase in overall deaths, but it's in our group life business. But correct, 18 to 64, and this is based on a comparison to 2021, the same quarter of Q3. It's regardless of whether this is our independent individual life or group life, Bill hit the nail on the head. Those numbers are staggering. And we know there's, definitively, and he and Scott Davison identified, certainly COVID had a huge part in that, but it wasn't all COVID. Although some of the things he talked about was, even though the cause of death might not have been listed as COVID, it certainly was an enormous contributor to it. There were a lot of conditions that went unchecked because of the pandemic. People were afraid to come in and get regular checkups and do the necessary, preliminary health work that needs to be done to avoid some of these obviously mortal and morbid conditions. So it's a very interesting time. And as a $100 billion company, we're life insurance, not just hybrid life, but we have our employee side, which we sell a lot of group benefits there. And we have our individual life insurance side, whole life and term. This is a big impact. And what to look for, the fallout from this is obviously it's going to be unavoidable that you're probably going to start seeing some increases in rates on every body of our solutions and products, where life insurance is either the base or the entire product itself. Interest rates are going to go up. We're looking forward to that helping. It's not always great, with credit cards, mortgages, and loans, what have you, but it's certainly good for the insurance industry because it certainly helps the ROI with the product. So that could offset some of it. But let me be very clear that there were a lot of other carriers that are starting to report very similar numbers, not just life carriers, but even health insurance companies are getting they're reporting in as well, that this is a global, I don't want to say pandemic, but this is something that is being actuarially realized across the industry. So Bill I would say nailed it. This is the time to be talking about, obviously, hybrid products. Morbidity is an issue, certainly with, the level of sickness that's been a huge fallout with COVID, but obviously for life insurance, because the numbers are absolutely staggering. So before I get into what I'm going to cover today, I'm not going to do a full deep dive on product. I know at Levinson, they're always trying to add value, and more than anything, help you guys turn illustrations into applications, give you ideas and conversations that sell. That's my goal as well. Anything I can do to help you guys get closer to the sale is always, the first thing that's on my radar. So what I'm going to talk about today are just the unique advantages and niches of the product that are what I call the sizzle of the product, that get you closer to that sale. And some of it is just around pure design, and some of it is some of the nuances of the solutions that make it so much more appealing to your clients. And I love tackling, presentations from this angle versus just dropping our whole product suite in your lap. But before I do that, actually, I know we're in conference mode, so I don't know if there's any questions. But Bill, if you're seeing any questions that you think are poignant enough that you want to ask before I move on to the actual presentation itself, please go ahead.
What we're going to do, can you hear me, Keith?
I sure can.
What we're going to do is everyone is using that question box, and because of time, we're going to get to every single question after we wrap up. We'll reply to each person.
Beautiful.
And then we'll get you back involved if we need a call or whatever the case is. So don't worry about that.
Okay,
but
perfect.
To all the agents, ask away, please, because every one of you will be answered when we wrap up. So no problem.
Perfect. Thank you. That makes it much easier. So again, today I'm going to talk about our unique product niches and advantages that help you get that sale. Every Tuesday at 2 p.m. I do a full deep dive, and something I started this year. I've never done this before. I'm doing quick little 15 to 30-minute trainings that are singularly focused to really help you bite into and adopt some of these solutions into your distribution. We already did the first two, and they're going to be going on bi-weekly. If that's something you're interested in, obviously, call Bill, call Carrie, call Andrew, Josh, whoever you're working with at Levinson, and obviously they can get you in touch with how to do that. It's a great time for elite benefits. We kind of just talked about that with the market itself. The volatility, obviously with the pandemic, it's certainly something to be talking about. I do want to mention that if you are in California, some of the things I'm going to be showing you today are not available because they're selling the older product. We had a product update, if you will, around the end of 2019, which really refreshed the product and opened the door for some of these really unique advantages. We're not in New York at all. I think most of you probably know that, but please, if you're in California, a lot of these will not apply. So again, I'm not doing a product deep dive today, but I want to, at least at 10,000 feet, spend 2 minutes just on how our product is structured, how it works. And what's great is it really doesn't matter which of our solutions you land on. In structure and design, really in concept, they all kind of look and feel the same. Our whole product suite is called Care Solutions, and that includes our whole life linked with long-term care, which is asset care, and our annuity products, which are annuities linked with long-term care, which is called annuity care. It's really just two products, asset care and annuity care. And the next really, what it boils down to is, where is your client's money and where are they most comfortable in funding this? And what's great about these solutions is they are 100% as unique as your client, because I don't care where your clients have their money, we are able to put them into a fully customized solution, single premium, annual pay, 5, 10, 20 pay, using their qualified money, taking their non-qualified annuities that have tax-deferred gains and turning them into 100% tax-free solutions with leverage for long-term care. But let's go to just the basics. We'll spend just a couple minutes on this. So when I go into our unique advantages and niches, you understand what I'm talking about. You start off over here with the base of the product, and you'll fund that, again, in a variety of ways. Single premium, annual premium, 5, 10, or 20 pay. You're going to put a premium into the base of the product. It's going to create a death benefit. Now, if you need the policy for long-term care, you're going to use that death benefit first. And the way that death benefit is disseminated is over a period of months, 25, 33, or 50 months. We call that the AOB, the acceleration of benefit, how we're accelerating the death benefit to pay for long-term care. So the base of the product, it's really where all the equity lies in the policy, because you're funding this and there's a death benefit. So your money comes in and provides value as a death benefit, but there's also cash surrender value. So should you decide that you want to quit your policy, you will have cash value based on your premium. And again, of course, when you need this for long-term care, you'll use your death benefit, you'll use the base of the policy. But nobody buys our solutions just for the base policy, just for the death benefit. That's kind of like insuring for the garage on fire. People want more. They can get our continuation of benefit rider. That's insuring for the house on fire. So what this is, whatever your long-term care monthly benefit turned out to be, which is really just the death benefit divided by the period of months you've chosen, 25, 33, or 50, that's going to give you an LTC monthly benefit, 3, 4, 5, 6, 7,000 a month, whatever it is. The continuation of benefit will just continue on that monthly benefit for either A, your death benefit value again, if your death benefit was 200,000, another 200,000, or B, the other option, which is what most people choose, a lifetime benefit that can never ever be exhausted. And this is what most people find is the unheralded or certainly unmatched, unparalleled value that we have built in with our solutions. So that's really how it works. And it's just asset care. There's all these ways to fund it. And that's really the only difference between the solutions. So let's talk about where our unique advantages really lie. And it starts with waiver of premium. I love this. So if your clients who are doing any of our recurring premium options, whether it's an annual pay or a 5, 10, or 20 pay, which is our limited pay option, any recurring premium, when somebody goes on claim, we waive all premiums. Whether it's an individual or a couple, just one person going on claim, we waive our premiums. Now, what's so unique and different about our solution is we're the only company, we're the only carrier in the industry that allows two people to apply with one premium on one contract, because our policy is joint life second to die. But this is huge. It gives us such an enormous buying power, because with every other carrier in the industry, you got clients that are coming up with, say, $100,000 to put into something like this. They'd have to split that $100,000 into two separate policies of $50,000 each. And they're going to get a death benefit each based on $50,000. And the long-term care benefit with all the carriers is always based on the death benefit. With us, they could take that $100,000, put it into one policy, and get a death benefit based on $100,000, not $50,000. That's going to obviously be quite larger than a premium that has to be split in half. So the fact that we're joint life, which we have a patent on, is a huge advantage. So again, waiver of premium is built in on any of our recurring premium options. But not only do we waive premium, when the clients go on claim, we'll continue paying the premium for them. So if your clients do a 5-pay policy, in other words, they make one premium payment a year for 5 years, and they go on claim year 2, they stop paying premiums. And if they're on claim for the next 3 years, their policy is paid up. We paid those next 3 years of premium payments for them. And if they have a lifetime benefit, they're just going to collect on this policy forever, having only made 2 premium payments. We have an incredible solution, the only carrier I know that will work with your clients' qualified money, 401k, IRA, 403b dollars. There's a really unique solution because we're one of the few carriers that will work with inherited IRAs, which is amazing, especially when you consider the Secure Act, which means beneficiaries have to take those inherited IRAs and 401ks and get the money out of those policies inside of 10 years. Our qualified money approach is perfect for that because it's actually a 10-year funding period, and it offers a 10% bonus on the premium coming in, and we'll talk about that. Another favorite built in is our 0-day elimination period for home care. So when your clients go on claim, if they start at home, which happens greater than 70% of the time, they're going to get benefits paid day one. There is no waiting period to receive benefits when you start off on claim at home. Not only that, the other caveat to that is the elimination period for facility is 90 days, but for home it's 0. But every day that you receive care at home, that will satisfy day for day your facility elimination period. We have a really unique feature. The only one that has anything like this, it's our Spider Rider, which stands for Single Premium Drop-In Rider. This works phenomenally well with any of our recurring premium options. I'll show you how this works. This is like being able to put a down payment with a recurring premium. The idea being, listen, you put a bigger down payment on your car, your monthly payments are smaller. Same thing with your house. That's exactly what you can do here. And of course, our calling card, what we've always had, lifetime benefits that can never ever run out, joint life coverage, which I just discussed, and our premiums are guaranteed. I'm not going to tell you, we've had these policies for 40 years. I'm not going to tell you in the last 40 years we've never raised premiums. I'm going to tell you we can't raise premiums just by the simple nature that our policy is non-cancelable, guaranteed renewable. And I want to go into some advantages with our pricing and some design nuances that really make our solutions look attractive. Specifically with couples and singles, we'll show you the qualified money. We have a phenomenal solution for high net worth clients that want to self-insure. We'll show you how to work with that. That's the easiest objection to get over, and we'll show you a design niche with our single premium drop-in rider. But we talked about the power of joint life coverage, and here we're going to show you using actual dollars and cents. Here's a couple. We have a 61-year-old male and a 60-year-old female that has $150,000 they want to put into a hybrid policy. Now, again, with any other carrier in the industry, they'd have to take that $150,000, separate that into two separate policies of $75,000 each, which gets you dramatically less buying power. So look at the top hybrid carriers in the industry, and being able to come into one policy on this couple for $150,000, we're getting a monthly benefit of $55.86. The next closest comparison of a carrier is over $1,200 less per month per person. So if they go on claim, and they're both on claim at the same time, this couple would be getting $2,400 less per month with our next closest competitor versus us. Oh, and by the way, that policy will end after 6 years. Ours is a lifetime benefit. Go to the one that's the least competitive, and they're almost $1,800 less per month per person. That's about $3,600 total. That's a lot of money. That's almost $40,000 a year in less benefit. And again, all of these policies end. Ours will never end. The power of joint life and how we look with couples is absolutely phenomenal. I want to talk about single males, and not just why I like them from a pricing perspective, but I'm going to show you here in this design one of my favorite ways to design the policy, really whether it's a single male or for a couple. But with single males, it just looks unbeatable. So here's an example. Client comes to you, single male, wants to do a single premium approach. And this is a little screenshot of our rate calculator. So here's the $100,000 for this 60-year-old male. It's going to buy him a death benefit of $140 and change. We're going to choose a 33-month base payout. So again, all we're doing is we're taking the death benefit of $140,000, accelerating it over 33 months, and that's going to give us an LTC monthly benefit, as you can see right here, of $5,617. So he'll get $56.17 every month to use to pay for long-term care expenses until he's exhausted his death benefit. But he puts this $100,000 in, and that's buying the death benefit, but it's also paying for this lifetime unlimited continuation of benefit rider. Meaning, even though he's exhausted his death benefit, he's still going to get $56.17 a month forever until he passes away or doesn't need long-term care anymore. So here's a single premium approach. But what I want to show you is what a little tweak does to the policy and how much more value you can add here. Because rather than doing a full single premium, meaning coming in with $100,000 to pay the base and the rider, if he takes that $100,000 and puts it all into the base and pays the rider off with an annual premium, look what we were able to do. We were able to churn his death benefit up from $140,000 all the way to $171,000. Now, no one buys our solutions for death benefit. That's just a nice to have. The importance of that is the bigger the death benefit, the bigger the long-term care monthly benefit, and that's what we're always striving for. So we took a $5,600 per month benefit and turned that into over $6,800 a month. He's going to get $6,843. That's huge. That's over $1,200 more per month. How did we do this? Because the $100,000 that's coming in is all going into the base. He's going to pay the rider off by writing a check on an annual premium. But look how ridiculously low this is. It's $1,565 a year. $1,565. So for him to get over $1,200 more a month, which is over $14,000 a year, it's only going to cost him $1,500 a year, $1,500 and change. And again, this is on a lifetime benefit. I love this, paying the premium annually on the rider, but doing the lump sum all going into the base. Just little nuances where our policies just look so much better. You can of course do that for couples, and if you did it for a couple, your premiums would be $3, $4, $5,000, still very, very low considering how much more benefit it adds. But for single males, it's just simply incredible how little those annual premiums work out to be. One of my favorite things to talk about, people, we get a lot of buzz in the industry about how we have a qualified money solution. There's, I don't know, I think the last time I saw upwards of almost $10 trillion sitting out there in qualified funds, 401ks, IRAs, and 403bs, and we have a fantastic solution that works with that. We call this annuity funding whole life. Why? Because we use an annuity as a pass-through entity to get the money into one of our whole life policies. So how do we do this? It's pretty simple. We create an IRA at One America, and we roll a lump sum of money out of your client's existing IRA, 401k, or 403b into our IRA. So there's certainly no taxable event there. We're just rolling money out of a qualified account into a qualified IRA at One America. And in that IRA is sitting just a qualified annuity, a single fixed premium deferred annuity, not a SPIA, but a single fixed premium annuity. Now, the first function of that annuity, and this is a part of the sizzle with this, is to give the premium intake a 10% bonus up front. So $100,000 comes in, it's now worth $110,000. And all we do is we take that new sum of money with that 10% bonus and use that to fund one of our asset care 10-pay policies. So we take 10 equal payments out over 10 years. The client, of course, is taxed on each of those withdrawals or distributions. And let me really show you how this works by walking you through it. Here's an example where we grab $150,000 out of a client's 401k or IRA. We roll it into the IRA at One America. Then it goes into that annuity, which gives it a 10% bonus. So on $150,000, that's another $15,000. So now we have $165,000 sitting in the IRA in that annuity at One America. And all we're going to do is take out 10 equal distributions over 10 years to fund a 10-pay. So 10-pay 10% of $165,000 is $16,500. So every year we take that out over 10 years. Is that taxable? Yes, of course it's taxable. It was taxable where it was sitting before in its originating 401k or IRA. But what we're able to do is grab a lump sum out of someone's qualified account, avoid a full taxation on that lump sum in 1 year, and spread that out over a 10-year period. And by the way, for your clients that are north of 72.5, this will satisfy required minimum distributions. And we're giving them that 10% bonus, which is going to offset a large portion of that taxation that they're going to be receiving anyway. So year one, we take out the $16,500, we draw it down. Year two, we do the same thing until after 10 years, we've drained that IRA and that annuity down to zero and have now fully funded our 10-pay policy. This is what that policy would look like, $16,500 coming over. Oh, by the way, one of the really exciting aspects of this, even though the money is originating out of a qualified account, they're able to add their spouse to this. So a husband can do this using his 401k or IRA and then add his spouse to the policy. As a matter of fact, if the husband isn't insurable, he doesn't even have to be on the policy. We can use his 401k or IRA, fund this, and put this just on his wife. So here's what that policy would look like. $16,500 coming over every year for 10 years creates a death benefit of $1.76 and change. That $16,500 is paying both the base and the rider. It's being split up between the two. We chose a 33-month acceleration here, meaning that each of them is going to get just under $5,300 per month per person for long-term care on a lifetime policy. Now, so it's unlimited. They'll never run out. Remember, we talked about how we have waiver of premium built into our policies. That's going to work here as well. So either one of them, husband or wife, either or both, go unclaimed. That $16,500 that would normally have to come out of the One America IRA and the annuity in there, it would not come out. It would just stay in there. And One America would still consider that year's premium payment earned into the policy. The other option is the clients can actually pull out the $16,500, but it won't have to go as a premium payment into the policy. They can just take that, keep it, and pocket it as income and just pay tax on it. I love our qualified money approach. We call that annuity funding whole life, and this worked exceptionally well with the Secure Act, which now states it changed how inherited qualified accounts work. Now, when beneficiaries inherit a 401k or IRA or 403b, they have 10 years in which the money has to be drained out of those inherited accounts. A phenomenal thing that can be done with our policy is for clients who are older, in their 80s or however old they are, and they know they've got a lot of money sitting in their 401ks and IRAs, and they ultimately know it's going to go to their kids. They don't even have to wait till they pass away. They're able to do one of these policies on their children. They would roll a lump sum of money out of their 401k or IRA. They would be the owners. Their children, or if they have a son and he's married, their son and daughter-in-law would be the insureds on the policy. And then their children, so the grandchildren, would be the beneficiaries. And now you're rolling this over even before the beneficiaries would inherit that qualified account. They could do it while they're alive. And what's really great about this is if they're in a smaller tax bracket than their children, who are probably in their 50s, and maybe if they're high earners, the owners of this, where the money originated, the original 401k, they would pay the taxation on it in their tax bracket. It would be considered being gifted over, of course, up to the allowable $15,000 gift, which they could do for either one of their children. Just really unique ideas, which you can do with our solution. Now, if they passed away and it's already been inherited by the beneficiaries, it's an inherited IRA, we will still work with that as well. And this is a great solution for something like that, because they have 10 years to get the money out. Well, this is a 10-year funding period. It works great for that. One of my favorite things to talk about is wealthy people. And listen, those are our favorite clients to work with, right? But very often, people who are very wealthy have expressed an interest to self-insure. Look, I could probably pay for this on my own. I probably just want to self-insure. Your new retort to that, or your conversation with them, is fantastic. That is exactly what we're going to do. But I'm going to show you a much smarter, much better way to self-insure. What you find very often with people who are fairly affluent, they have their money spread out in a variety of places, but there's always a sum of money that's sitting either in a cash fund, a money market, a bank account, doing nothing. It's their emergency money. And that's the money you're going after. All we're doing is we're taking our asset care single premium policy, and we're opting into the guaranteed return of premium rider, meaning whatever money comes into this on a single premium is 100% available to them at any time. So if they have 200 grand sitting in a bank account or a cash fund, money market, doing nothing, why would it sit there? Have it sit in a policy with One America. It's the same $200,000 that they can get back and have liquid at any time. The only difference is, should they die, it's now at least a tax-free death benefit. Sitting in a cash fund or money market, it's in probate and taxable. But if it's needed for long-term care, then we're really showing the leverage on it. And let me give you an example. Here's our single premium policy without guaranteed return of premium. It's a 60-year-old couple. They're coming up with $150,000 in premium, where $95,000 and change goes into the base, and the remaining $54,000 is buying the continuation of benefit unlimited lifetime rider. Well, that $54,000 buying the rider is gone. No cash value on that. They want their money back. They're just going to get cash value based on the $95,000 that comes in. Someone who's looking to self-insure is saying, I don't know if I like this. I've got that 150. It's sitting where it is right now. I'm buying this rider up front for $54,000. But with the return of premium rider, what we're able to do, and there's one thing to note, there's no charge for this rider, the guaranteed return of premium rider. It does, however, limit the design of the policy. the acceleration of benefit on the base can only be 50 months, and the continuation of benefit rider, we don't allow the lifetime benefit there. It's only an additional 50 months, but that's 100 months of long-term care. But let's look at the dollars, what this looks like. This is showing you with guaranteed return of premium, 150,000 comes in. Yes, 95,000 still goes to the base and 54,000 goes to the rider. But if they want their money back, that 150,000 is guaranteed to always be there waiting for them. That's why it is a guaranteed return of premium. They'll always get their 150 back. But let's look at a good example. Here's a 60-year-old couple, and they've got a ton of money, several hundred thousand, sitting in a cash fund doing nothing. Let's grab $250,000 of that money, and let's look at it at an illustration. It's a declining death benefit to where it levels out at year 12, where that 250 is level at $403,000. So their 250 can sit in a bank account and be taxable to a beneficiary and be only worth 250, or it can be 100% tax-free and be worth $403,000. For that reason alone, this makes sense. But if they needed it for long-term care, we're going to turn that 250 into over $800,000 total long-term care benefit, and they're each going to get $8,000 per month per person. You can even add inflation to this and turn that 250 25 years down the road into over $1 million of total long-term care benefit. The only caveat, inflation protection, the cost of that rider, that is not guaranteed as return of premium. They would lose the cost of that rider, which is about 20 grand. But again, you're taking 250, turning into over $1 million. Again, that conversation is, hey, you want to self-insure? Fantastic. Exactly what we're going to do, just smarter and better. Last thing I want to talk about before I bring just a couple of value adds with some of our marketing solutions is our single premium drop-in rider. And again, this is kind of like a combination funding method on a combination product. Again, it's like putting down a big down payment on a car or somewhat of a down payment on a car to reduce your monthly payment. And this works on any of our recurring premium options. So here's a good case study. You got a couple age 60, $500,000 in assets, which is good, but it's probably not enough money to do a full-on single premium. But they've got strong income, so you could do certainly an annual pay with them. And they really want to spend no more than about $10,000 a year in premium, and they really want to try to get as close as possible to $5,000 or $6,000 a month benefit. So if you just ran that, you get them a $6,000 a month benefit on an annual premium, you're looking at $13,734. It's a little more than what they wanted to spend. And what I forgot to mention here is they do currently have a life insurance policy that has $50,000 in cash value sitting in it, which is going to make a fantastic source to help us fund this policy. So if we just ran the quote on an annual premium, it's $13,700 and change to get the $6,000 a month that they want, a little more than what they wanted to spend. They wanted to be closer to about $10,000 a year in annual premium. So if we grab that money, that cash value in the life insurance policy, and we drop that in using our single premium drop-in rider, which allows us, after up to 6 months in time of them accepting the policy, to do a drop-in of up to 100 grand. But if we do that right out of the gate, they drop in the 50,000, and what does that do? That knocks their annual premium all the way down from 13,700 and change to, as you can see here, exactly 10,000. So we knocked off $3,700 a year in premium by dropping in that 50 grand up front. This is a 60-year-old couple. So I know some of you are probably thinking, so does it make sense to bring in 50 grand up front and knock off 3,700 a year, or pay 13,700 a year and hold the 50 grand? Well, let's just take a look at this couple use the policy at age 85. And whenever we do conjecture, we always mark 85 as the strike age, because at 85, if they go and claim, they stop paying premiums. So if they were to, we brought their premium down to 10,000, and if they didn't do the spider rider, if they didn't bring over the $50,000 up front and paid $13,700 a year, their total premiums by the time they're 85 would total $343,000. If they bring over the 50 grand and pay $10,000 a year up to the age of 85, their total premiums would be $300,000. So by using the Spider Writer here, you're saving this couple $43,000. I love this. Let me tell you something. This is something that you're going to see very often. People that are buying that can afford $10,000 a year in their 60s probably have 3, 4, 5, 600 grand put away. Not quite enough to come up with a single premium to pay the whole thing. You'd need 100, 150 grand, but they can certainly come up with 30, 40, 50,000 as a one-time drop-in and do an annual premium and make those annual premiums look just so much better. All right, so one of the things I wanted to talk about as a value add today is our marketing programs. One America has something called the One America Marketing Store. And, for those of you who are not actively marketing, hybrid products, linked benefits, LTC, and or One America, let me tell you something. We have an incredible, very powerful tool waiting for you. Imagine having constant contact for free, ready to go for you, but with content. And that is exactly what this is. We have incredible social media bundles. It's set it and forget it. You just go in, you pick a bundle that might have 30 or 40 social media posts, and every 2, 3, or 4 days for you on your behalf, it's going to post an article, video, or meme to any or all of your Facebook, LinkedIn, or Twitter accounts. Some of our campaigns run 15 weeks. That's like 4 months. Set it, forget it, you're done. So I know a lot of people don't use social media properly. A lot of the reasons why is they don't have the content. This is done for you. We also have fantastic drip campaigns where you can go and again, it's set it and forget it. It can run for you every week. You upload your database of clients or prospects right into the system. We'll show you how to do this, and you can do a drip campaign. We have several emails that you can send out to your clients. It will be with your headshot, your contact information, your call to action. It will even come from your email address. So if you're not taking advantage of these fantastic options to help you guys drive linked benefit business, I can tell you you're missing the boat, because there's a lot of business and a lot of money to be had there. So I know I talked a lot. I wanted to try to keep this to about 30, 40 minutes. So Bill, I want to send the baton back your way. And once again, thank you so much for having me on. I love doing these, and I'm very excited about the Expo.
That was spot on, Keith, as always. And keep in mind, everyone, we're both big Tony Robbins fans. We've been to his events, so obviously you can feel and see the energy, which is what it's all about at the end of the day. And I love listening. So good stuff. Okay, we're just about done here. We got 4 minutes. And again, every question will be answered when we finish. So please feel free, dive in. Good, bad, and different. We want to hear from you, especially for the Apple Watch giveaway in about 3.5 minutes here. So good stuff as always. All right, so getting started, like I said, everyone is going to receive a thank you email with all the instructions, brochures, appointment link, everything you need to get started, okay? We also have some awesome living benefits videos that are pre-made for you. We can brand with your logo, picture, phone number, website, social media links for free. Okay, one's like 2 or 3 minutes. It's perfect if you're marketing on social media or you want to e-blast out to all of your book of business, clients, friends, network, all the above. And when they click, the lead goes right back to you. They don't even see our information. Okay, and again, free. And we have the same concept with templates in our marketing library that you can send out just to spark interest and make the phone ring. That's what it's all about. Okay, the cheat sheet that I was mentioning earlier, if you're a working lead selling over the phone, you need to know the go-tos, right? When it comes to hybrids, living benefits, riders and products and all the bells and whistles. And we put together a quick Excel spreadsheet that you can use for reference. And that's what's in front of you on the right-hand side. It's on our website. And again, thank you email. It will be included. Okay, now we all love the concept, right? I mean, who is going to say no to this with full return of premium, right? Think about this, non-med, e-application, underwriting 1, 2, 3, if there's minimal issues or no issues as far as health goes. Now we need the consumers. We need the prospects. How do we go out and find them, okay? That's the $100 million question. So We have a consumer database of millions and millions of prospects. You can literally go in and say, okay, I want to talk to everyone ages 45 to 60 with a household income of $100,000 and a certain area code, zip code, whatever you want to search for. The system spits out names, phone number, email, address, and then you put your campaign together and go after that group. Okay. Plus, we have various lead programs where these people are ready to talk life insurance. And then it's up to you to ask the right questions, be able to pivot, and bring up these great products. Okay, so the list is endless. Okay, the list is endless. There are so many opportunities if you're willing to get scrappy and put in the work. Okay, it's not easy. Okay, but we laid it out for you. Okay, I know you can do it because we're seeing the premium come in, and again, double for 2021 versus the prior year, and a lot of it is due to COVID and the pandemic. Okay, so I was talking about the living benefits videos that you can use to market. And again, we build it for free with your logo, picture, all the above. So we have a co-branding resource center on our website, okay, where you can just pick and literally sign up, and we build all the marketing for you. That simple. Talisa in our office actually heads up that department, and she would be more than happy to get you on the phone and get these videos sent. The Bill Levinson Experience podcast, the latest episode 37 with Carrie Levinson, our founder, who started the company in 1972 before I was born. We have some great stories. We're both going to go back and forth and rant. It's going to be awesome for an hour. So you'll see that in the next week or so. It's going to be a lot of fun. And most important nuggets you will walk away with. Again, some other great episodes that you should listen to over the weekend. Okay, we just had MVP, World Series MVP from the Atlanta Braves, Jorge Soler. I interviewed him for an hour. He's the biggest name in baseball today. And we did this interview before he was with the Atlanta Braves. So cool story. A few of our top agents, Mr. Jeff Levitetz, Cleveland Clinic's Man of the Year, Forbes 400, top A-lister. 3-4 years in a row. In fact, I'm going to see him tomorrow night. Very excited about that. Listen to that episode. It's freaking amazing. Gary V, social media guru. He's as big as Tony Robbins now. I sat down with him for an hour, okay, to pick his brain about life insurance marketing with social media. And then we have a top MDRT agent, Pradeep. I picked his brain. Anyway, the list goes on and on. I don't want to take up any more of your time. We're running a minute over. Future trainings, that's what we're on right now. If you want to dive into that prospecting database a little more, Agency Automator, all of those trainings are held every single day at 2 p.m. live, hosted by Kevin, our programmer. And then in the blue section on the bottom, that's what you're on right now. Every single week, we pick a new hot topic that's going on for the new year in our industry. So make sure you take note of those as well. Let's go to our last slide and our question of the day. It's probably the most fun for you all, right? So I'm going to start with our Positive Tuesday quote every single Tuesday on all of our social media platforms. And what does it mean, Positive Tuesday? Absolutely nothing. Okay, what it means, and I say this on every webinar, don't listen to what I say, me, Keith, and Andrew, and even Kerry, okay? Watch what we do. Watch the marketing and branding consistently and persistently every single week. Think about this. If you get our emails, right, our e-blast, look at how many times a week we're posting, we're blasting. Okay? Look at our Facebook page, look at our Instagram page. Every single week, we're putting out a message, a statistic, a testimonial, a review, because it's all about marketing and branding. So when your friend or neighbor or someone in another state thinks life insurance or long-term care or hybrids, they remember that crazy guy, Bill Levinson, with the cool haircut, and they're going to call me, okay? We don't even sell on a retail level, but that's how you need to look at it, right? You have to be thought of as the go-to when it comes to insurance and annuities. That's simple. The only way you're going to do it is to get yourself out there. Create a YouTube channel. Get scrappy. Get creative, okay? Our Positive Tuesday quote, we don't just decide our future. We must first decide on our daily habits. which will ultimately shape our future, okay? We all want to see, hey, oh, we're going to make it big in the next year, 5 years, 10 years. Great. What are you going to do today to help yourself get there? That's what that quote is about. Now, we're going to have our question of the day, Apple Iwatch giveaway. Make sure your little fingers are on your keyboard because the first to answer wins it. So the question is, we are launching our new mobile 2.0 Levinson app. Tell me the launch date of the mobile app Levinson and Associates is launching. I mentioned the launch date a couple times. I also put it on a slide earlier. Tell me the launch date of the new Levinson mobile app, and you win. If you were first and correct, you win. Andrew's going to look at the answers right now and tell us who was first and who walks away with an IUL prospecting book and a brand new Apple iWatch. Andrew, do we have a winner?
Yes, we do. First answer correct is Charles E. Charles E. from Illinois.
Charles from Illinois, the correct answer, 2/11/22. That's February 11th, 2022 is the launch date. Congrats, Charles. Thank you, everyone, for taking the time. Utilize our co-branded video, okay? We'll put your picture, your name, all of your info. It's free. Our templates, free. Agency Automator, okay? The package starts at $25 a month. It's a co-op discount. It doesn't get any cheaper than that, okay? So you have to put your right foot forward, make it happen. Keith, thank you. Andrew, great job. Thank you, most important, to every one of you that sat with us for the last 62 and a half minutes. Have a great Thursday, great rest of the week, great selling, and thank you again, everyone.